Welcome to the Expansive CEO podcast. I'm your host, Hannah Chapman, founder of Expansive CEO and X Squared Wealth Planning. Buckle in as we explore how to create true prosperity and build a business and a life that expands beyond yourself and makes a dent in the universe. Welcome, everyone, to this episode of the Expansive CEO podcast. I'm your host, Hannah Chapman, and it is Investment Friday here again at the podcast. And I've got Brad Haines, the Chief Investment Officer at Juncture Wealth Strategies, here with me today. Hey, Brad, we haven't seen you in a couple of weeks. How you doing?
Doing well. You're right. I've been busy doing some things, taking care of some business with some clients. And so I apologize for missing the last 2 weeks.
You know what? It happens. And when that happens, I get to do solo episodes, which are also great. So people just get to listen to me talk to myself, which we did last week. So thank you for being here. It's great to have you back. And so we're recording this Thursday, June 20th for release on Friday, June 21st. It's 5:04 p.m. right now. So markets are closed and we had a little bit of a weird day.
We
So
did.
yeah, let's talk about that first.
All right. So some news came out before the market. Elon Musk, who everybody knows is he's a majority owner and runs Tesla. He owns the company formerly known as Twitter, now X. He owns SpaceX. He owns a lot of different companies that he helps run. Well, he has a new startup called XAI, which is an artificial intelligence startup. And he's building or Dell announced, I should say, that they're involved in helping XAI build a AI supercomputer factory or place. And Elon Musk did confirm that Dell is one of the companies that they've slated to help build this supercomputer that they're building for artificial intelligence. He also named Supermicro as another company that would be involved in building out this supercomputer. Now, both Dell and Supermicro use NVIDIA's chips. So for those stacks, for those servers, that supercomputer. So all those companies shot up in the beginning a lot, a couple percentage points. And then the S&P 500 reached the level of about 5,500 intraday. And people just started to take profits. And that's effectively what happened is you saw this turnaround, and all of a sudden the companies that had been leading earlier in the day or earlier this year, NVIDIA, AMD, Supermicro, Dell, all kind of turned around and came further back. So
yeah, and so just to reiterate that, the S&P 500 has never hit 5,500 before, correct?
That's a record level.
That is a record high for it to hit 5,500 as its measure. And so typically, this is actually like, if you just looked at it on the stats, you'd be like, that doesn't make any sense. Why is that happening? Right? Everything was going great. The news was great. Typically, whenever we hit a high level, especially on the S&P 500, people take profits. They're like, great, that means I made, 10% or 15%, whatever their percentage that they were looking to make on certain investments at that moment. They're going to sell that, take those profits. That's what we mean when we say profit taking, right? And then wait for it to die back down, right? Because then a lot of people took profits and it came down a couple percentage points from the high during the day, at least.
Yeah. Yeah. And that's really typical. Like you were saying, I mean, there's a lot of traders on Wall Street with both institutional investors, hedge funds, but also individual investors and households that make the decision that, hey, we're at record highs. We've had great returns so far in the S&P 500. I'm just going to take a little bit off the board, particularly going into the summer, which is typically seasonally a weak part of the equity markets. Additionally, we have the added uncertainty of the presidential election coming up in November. And a somewhat slowing US economy, which, hopefully gives us lower interest rates, but at the same time, we don't know that right now. So a lot of people are saying, I'm just going to take a little bit off the table, bank some of those profits, and wait to see if there's a better entry point down the road.
And so, again, like on a more zoomed out macro scale, when we see this, when we see these intraday highs, how long do you think it takes to like have that as more of a support level that, okay, we hit that 5,500. Is it likely that we're going to return to that and then go higher?
Yeah, it really depends on corporate profitability. If corporate profitability continues to grow in a nice fashion like it has over the last 5 to 10 years, then that will become a support level fairly well, fairly recent, not too far in the distant future. If corporate profitability, because of high interest rates, slowing revenues, if those kind of macroeconomic considerations become more effective or more powerful, then it may take, a bit for us to attain those highs again and to stay there and to make it a support level as opposed to a resistance level. But again, I tell people, just because it's high doesn't mean it can't go higher. And we're in the process right now of we're following the 2000 or the 1998 to 2002 timeline pretty well, in terms of we have the AI trend now, we had the internet trend back in the turn of the century. So it's important to note that things don't go up or down in straight lines, and so we haven't had a pullback in a while. It's kind of a natural course of business, and so it's a little healthy to see it shake out just a little bit.
It's good. Um, good. The word I want to use is advice, and it's not advice. We're not giving advice here. We're just giving education.
Yeah,
So
yeah,
make
it's
that
something
very
that
clear.
people need to realize, and just to sit back and not panic about everything, so it's one of those things that we just have to be aware of.
Yeah. And the one of the dictionary terms, I think, to define here with you is the resistance and the support. So what is, like what does that mean? So being a CFA, like that's part of your lingo. So tell us what that means
Yeah,
exactly.
so a support level is a price at which there seems to be more buyers than sellers for that stock price. It's a level that if the price drops, there's a number of buyers that will step into the market to buy the shares that are being sold. And generally what happens is you'll see the price bounce off that quote unquote support level. So just like a support beam, right? It holds that's the area where the buyers are poised to take the excess shares off the market. A resistance level is exactly opposite of that. It's a price level in which investors, traders, owners of that stock have determined, I'm going to take a little profit. Okay, I'm either going to sell part of my position, or I'm going to sell the whole position at that level. And that level, periodically, if it's a pretty strong level, meaning it's hit that level a lot and bounced lower because sellers have stepped in to sell more shares, so the price then declines. If it bounces or touches that price level a few times and then eventually breaks through it, then what happens is that resistance line becomes a support level for that stock. Again, I'm speaking in general terms. It's not the same for every stock. There are lots of examples of support levels being broken and resistance levels being broken, and vice versa. So it's something that we just need to keep. It's something we look at. It's consideration. And so I hope that explained it.
Yeah, yeah, I thought that was really, really helpful because every once in a while, um, like mainstream news will kind of throw out these terms. You'll see people, like the Reddit trends of like what meme stock are we buying now, right? That kind of thing, and these terms kind of get thrown around, but people don't actually understand what they mean. And I think when we don't really understand, there's part of the population that will just do stuff anyway, right? And maybe end up with a bad result
Yeah.
from that and really regret it and then step back and then like be like, I'm not touching the market anymore. And then there are people who like really don't understand and they just pull back completely and won't again, like feel too confused about it. And so if we, just talk about some of these things, we get to educate in a way that people will be able to um, make better sense of what they're seeing in the news. And then, if you talk to your advisor, not everyone does quite as much technical analysis as you do, Brad. So there's that too, right? A lot of advisors like wouldn't have much experience with that, myself included, right? Like I can look at that and I can understand what it means, but that's not what I'm in every day. I'm not, in there looking at resistance levels and support levels of the different stocks in the portfolio. That's why I have you. Um,
Yeah.
so
I mean, we combine at Juncture, we're a little different because we combine uh, factor, uh, factor slash quantitative factors along with fundamental analysis, and we determine when or how we're going to trade those positions. So factor and fundamentals choose what we're going to buy. Technicals tell us how to trade, how to
mm,
enter a position, how to trim a position, all of those things. So it's important. There's a lot of different things going on there and different perspectives.
I love that. Thank you. Thank you for
Yeah.
sharing that. So moving on to the more like educational piece that we wanted to talk about today, we want to talk about dividends.
Yes.
And what are dividends?
Love dividends.
Right? Like, what are they? Why should we know what they are? Why do they matter? What kind of companies like have a dividend? What does it mean? And is this something that people should be looking at for their portfolio? A consideration they should be making is like, does this stock pay a dividend or not? Like, what are the factors for someone to consider if they should be in a dividend based portfolio versus a growth based portfolio?
Okay. Dividends. So first of all, I'm going to define what a dividend is. A dividend is a payment from the company that is your share of the earnings. So let's make a pretty easy example. Let's say a company makes $1,000, okay, and you own 10% of the stock, and they're going to pay out half of their profit to the owners as a dividend. Okay. So what happens is you own 10%. So that's $100 in earnings that you're kind of responsible for, or you own, quote unquote, own, and they're going to give you 50% of that. So all of a sudden in cash, in 1 year, you're going to get $50. And that is a dividend. That's your portion of the earnings of the company um, to help you. You can do whatever you want with it. You can spend it, you can save it, you can reinvest it, or you can um, just reinvest it back in the stock of the company and grow your own position there. Dividends are really great. I love dividends. I've always loved dividends. And the reason why is because earlier in my career, I was valuing privately held companies for mergers and acquisitions and for all kinds of different purposes. But that's that's kind of my standpoint. And I had a conversation um, with a gentleman who owned a very large business, and he was very concerned about what was happening in the market at the time. The market was falling off a cliff. This is 2000 2001 period of
Mm,
time, and we were talking about it. I was interviewing him about his company because he was looking to sell it. And I asked him, I said, if you're really worried about the equity, you know, your stocks going down in value, the biggest thing you own is this business. Just sell it today. Let's find a buyer. Okay. And he looked at me funny and he said, well, can't do that. And I go, why not? He said, because I make too much money from the company. And he was exactly right. His dividend on his company's assets was enormous. And so he could stay with that position longer because he had the cash flow that made him feel comfortable holding that position for a long time. Now, this gentleman is not unique in this viewpoint. A lot of people I've met, if they understand the company, the stock they own, and that stock provides a decent, good, healthy dividend, generally speaking, they're willing to stay with those positions for the long term, as opposed to one that pays no dividend and you're relying 100% on capital appreciation. Capital appreciation is great over a long period of time, but is very capricious year to year. You can definitely have 50% pullbacks on the equity market in any one year. And that's something that a lot of people don't have the risk tolerance to do, particularly as they age and they're getting closer and closer to retirement. So that's what a dividend is. A dividend type strategy is interesting for people, again, as they approach retirement and they start to want to live on their assets. Dividends are much, generally speaking, are much more reliable as an income source than, like I said, capital appreciation, which can go up or down. Hopefully for a long period of time, it continues to go up. But those drawdowns can be really, really devastating to your lifestyle if you're relying on it for your lifestyle. So dividends find a good home for people that are living, that need that income to live on. So what do you look for in that type of company? Generally speaking, you want a larger, very financially sound, with a revenue stream that is repeatable a lot. Okay. I'll give you a great example. I'm not advocating you buy or sell this stock. So when I mention this particular company, please don't go out and buy it. Do not buy it. I'm not advocating you buy it. I'm just using it as an example of something that's easy, okay, to understand. Kimberly-Clark makes toilet paper. Okay. Your people are going to buy toilet paper in good times and in bad times, no matter what.
Everybody, a lot of toilet paper in bad times is what we found out.
Yes, as we found out in 2020, people, that is gold. So that's a company that the revenue stream may not grow a ton, but it is pretty repeatable. And if the balance sheet is pretty solid, that dividend is probably pretty secure from year to year. And it may grow over time. I mean, our latest spat of inflation over the last, basically since 2020, has enabled certain companies to grow those average prices. And those average prices going up means healthier earnings for those stocks, which means your dividends can grow as well. So that's the kind of a profile of a dividend types company that people want to look at. And there's lots of companies. The S&P 500 prior to, let's say, 1990, about 40% of your total return on the S&P 500 was due to your dividend. And only so out of the 10% average return, 4% of it came from a dividend, 6% came from capital appreciation. Okay. I think people forget that. They think that 10% is all capital appreciation. It is not. It is
Mm-hmm.
actually a combination of and dividend reinvestment and price appreciation. So around in the 1980s, capital appreciation became the tax code changed where dividends were kind of pushed to the side as the baby boomers wanted to go forward. They wanted to grow their assets. So they made capital appreciation, capital gains taxes very minimal compared to dividends. And so they corrected that a little later on with qualified dividends, but it's something that dividends, I think, with the baby boomers retiring, are going to make a resurgence in importance, particularly as people, continue to retire and they start to live on those assets.
So you just mentioned one thing that I think is important, and let's talk about this a little bit more as well. So the capital appreciation versus dividend. And it's interesting because it's like that's kind of how it's talked about. Like, do you want capital appreciation or do you want the strong dividend? And the reason for that, why is that even a conversation? The reason for that is because companies who pay a healthy dividend are doing exactly what you said, right? Here's our corporate profit. We're going to take a portion of it and pay it out as a dividend. So literally part of their profit that they're making is going to their investors.
Yep.
Where growth companies take their profit and reinvest 100% of it into the business is typically the model, right? Is what they
Theoretically, yes.
theoretically, right? Like, yeah. So that's why they're not paying. That's why they say they're not paying a dividend, is because they're taking all that profit and using it to keep growing instead of taking a portion of that and paying it as a dividend. There's something like coming up for me about stock buybacks that, like, I don't think that's quite true, like you're saying, but
Well,
I don't know.
yeah, I mean, stock buybacks, which is how, I mean, essentially, right now we have about a 2% dividend yield on the S&P 500. The reason it's so low is because of buybacks, right?
Mm.
Companies are using are attempting to return excess capital to shareholders, in a tax preferential way by buying back stock. Thereby, you have less stock, that price has to adjust higher for that market cap to remain the same. I mean, Apple is a great example of that. They have returned so much money over the last 10 years in terms of share buybacks that they've effectively had a dividend in there, but it didn't come to you as a cash dividend. They just kept buying more and more stock back. So your price appreciated. Now, I think personally that the IRS and the Congress is going to have to change the tax code to make dividends a little more preferential than buybacks, because um, just as the baby boomers, when they were starting to go through their years of, hey, we need to grow our assets to prepare for retirement, now they're at a point where they're like, hey, we need to live on our assets. So dividends become a much more important part of the total return equation, in that circumstance. So I think you're going to have baby boomers pressure their congressmen and women and their senators to make the tax code more fair, or or at least somewhat preferential to cash dividends, which they haven't had since the 80s.
Mm. Yeah. And so when we look at companies that pay dividends or higher dividends, um, that is one thing that we tend, or overall, like the trend is that we tend to call those value companies, like the large value companies versus the large growth companies, right? Again, those two spaces. If it's a large growth company, we expect that they're reinvesting everything into the company. If it's a large value company, there's more chance that they're paying a dividend. Is that also?
Yeah, I mean, I think generally that's the case. I think that certain of the companies now are starting to bleed over. A couple of years ago, when Microsoft started paying a dividend, Cisco started paying a dividend. Kind of the more mature at the time, the more mature tech companies started paying a dividend. Um, I think that those definitions started to blend.
Mm,
Uh, I started looking at value managers, and a lot of them had Microsoft even at a very small dividend because it had the capacity to pay so much more. Now, with the recent AI resurgence of Microsoft, Nvidia, and the like, you have some very large, very, very fast growing, large companies that are now paying dividends. Nvidia paying a dividend. It's the largest by market cap. It's the largest company in the world. And their announcement a week or two ago where they're doing a 10-for-1 split, they also increased their dividend, which I
wow.
thought was interesting because to give you an idea, in 2021 or two, their free cash flow was $3.2 billion. Okay.
Wow.
So keep that in mind. Last quarter, the 12 months, including last quarter, was 39 billion
Wow.
in free cash flow. So you can see a 10 times, 11 times growth factor, and they're starting to pay a dividend. So you would think in that kind of paradigm where value versus growth, you would think, well, that's why wouldn't they reinvest all of that into that fast growing AI market? It's probably because they need to return some to shareholders, or they're not growing as fast as or fast enough to require that extra financing. So
Interesting. That's super interesting, actually. I like the learning that shift, right? Especially um with some of those bigger companies, right? Seeing that the one that was coming to mind is like an early example. Again, none of this is a recommendation to buy or sell any particular company. So just to be super clear about that again. But the one that was coming to mind as like a really like long-term dividend pair was IBM, right? That
yeah,
they were like one of those steady quote unquote blue chips, right? For a really long time. Um, and paid dividends, and people would retire on that, like you said, retire on that, get their IBM dividends,
yeah,
and
yeah,
you literally use that to live. So going forward, then, especially if we're seeing some of these, I'm going to call them, the darlings of the S&P 500 right now, starting to pay these dividends. The other thing you were talking about before we started recording was that we're seeing some higher dividends than we have in a really long time, up at that 3-4% range. So that means, even if, let's say, company XYZ has a stock price of $100, even if they don't really grow past that $100, if they give you a 4% dividend, you've had 4% growth in the year,
correct.
correct? Um, but it say the stock price does growth. Maybe it grows to 110 and you got a 4% dividend. Then you've got, well, I can't do the math that fast. 14% growth, right? Ish. Don't quote me
Yeah,
on that.
the way I think it's important for people to look at is again, this is simple math. Okay, if you get a 4 to 5% dividend every year, and let's say it stays static, you only need to average between 5 and 6% over a long period of time to get that 10% average rate of return. And the thing is that 4 to 5% is like clockwork. Every quarter, presumably, you're getting those common share dividends that are paying to you in cash. Now, that capital gains in any one year, you could go up 20%. You just don't know, or it could go down by half. Well, if it goes down by half, you're still getting that 4 to 5%, which now happens to be 8 to 9% in if they don't cut the dividend. So it's really a fantastic way of compounding your wealth, but also providing cash flow for you as an investor to do with what you want, reinvest in something else, or to reinvest in that particular company, or to spend it to live on.
And so that's the last place I wanted to like flesh out a little bit here, because those choices, right? It kind of depends on what phase of life you're in
Correct.
and what you need, right? Because if we are talking about compound growth, what does compound growth mean? Compound growth means, let's say you had that $100 in stock XYZ and it pays a $4 dividend. If you take that as cash, that's great if you need the cash, right? If you're living on that cash, you can take that and you can spend it, like you said, but your investment stays at $100. And so that dividend is going to just keep throwing off at $4 and $4 and as long as that is $100 in your investment. That would be simple, right? Simple interest off of that. If we're going to compound that, compound means we're putting it on top of, right? We're adding to it. That's what the compound part means. So if you have that $100 and you get a $4 dividend and you add, okay, I'm going to reinvest these dividends back into the company. That 100 turns into 104. And then the next 4% dividend is off of $104. So now it's $104 and change. And you put that on top and now it's $108.20. And now the next quarter, right? And then it's going to be $113. And that's the compounding. That's what that means. So every time you add the dividend back in, it's compounding on top of itself. And the dividend that's thrown off, the percentage, is now a bigger number. And so
It's now
that's the
growing.
right. And so that's the most basic definition of compound interest. And that's why when you look at a long period of time, you can see why if you take that $4 as cash every time and use it, that's great, that's fine, but your initial investment isn't going to grow the same way. It's going to grow less over time versus if you compound that interest, that's what accelerates the growth so that it's very, very noticeable over especially 10 to 20 to 30 years, right? That
Absolutely.
compounding is
A-
really important.
Absolutely. In fact, it makes up most of what your ending wealth value is that compounding factor. So yeah, it really is depending. When I find people who are really interested in dividend strategies, or they're typically going to be older, they're either preparing to or currently in retirement, where they're living on their investment portfolio. Okay. That's not to say the second thing where I find is not just is their life, their life stage, but also their emotional tolerance for downside risk.
Mhm.
Like I, mentioned earlier with that gentleman who had the business, he loved dividend strategies because again, they paid a lot of cash flow and he felt comfortable holding on to those companies that paid big cash flow. It just made him feel good, and he was able to weather all of the ups and downs with dividend strategies. Um, so you may have a young person who, because of their lack of tolerance or their intolerance of volatility, may also veer towards dividend type strategies. Um, yeah, so I think they're great. They can span the age spectrum, but generally speaking, it's people getting close to retirement or people that have had liquidity events in their life where they sold a business or they had a big investment payoff. They can really benefit by having some investment or some dividend strategies in their portfolio somewhere.
Yeah, I love that. And I just wanted to mention that it's really interesting to see kind of how attitudes have shifted towards the stock market, especially for people who, I mean, it I'll say I've had a lot of conversations with people who are solidly, 45 and younger, who do not feel comfortable with the stock market.
Yep.
They don't trust it. And part of that is because really because of 2000, 2001 market crash, and then 08, 09, right? Like this generation lived through two really significant crashes, watching their parents deal with it in the 2000, 2001, and then being affected by it in 2008, 2009 in terms of like the economy is trashed right now. Like I can't get a job and I can't get a job in my chosen field for, the first 5 years after college, right? Like there was a lot of turmoil, and I've actually, so that age group in particular, there are there is a it's a significant amount of people I found that are very wary of the stock market because of those two formative experiences in like late teenagehood to early adulthood, for sure.
Yeah, and I think, you know, I agree with you. I think that a lot of people have been soured on it. Um, I've also run into people that are like, well, the stock market's rigged against me.
Mhm.
Okay. Well, guess what? If they pay a dividend, they're not rigged against you. They could rig anything they want. You still get the dividend.
Mhm.
Once it's paid, it's paid. So, when people believe that it's like, fine, believe everything is rigged. But about this company, they're still selling a product and service. They're still paying all their bills, and they're still going to share a portion of their net income, that profit with you in terms of a dividend. So even if you believe it's rigged and you can't really rely on capital appreciation, rely on the dividend growth. Let's let's
Mhm.
let's go at it that perspective. That has worked on a few clients that are very, very concerned that um, that capital appreciation won't be there for them.
Yeah. Yeah. I wanted to mention that because it is the stock market and investing in companies, especially companies that you understand, that you believe in, all of that is is one of the only ways to make your money work for you instead of you having to constantly work for money, work to earn money, right? So this truly is one of the ways that you can build wealth and prosperity for yourself without having to work harder. Right. So this kind of shift in perception that we've had again because of, lots of factors for sure. Um, but for especially for the younger generation, I feel I don't feel personally responsible, but I feel like it's like having a platform to say something about it. It's important for us in this age group, if you're in your 20s or your 30s or your 40s, to really take as much advantage of the time frame that you have to be invested as possible because that compounding over again 10, 20, 30, 40 years, that's what sets you up. That's what makes it so that you don't have to continue to work hard to earn money until you drop dead, right? That's We don't
Exactly.
want that. None of us
No,
want that.
no, no. And it's important. Yeah, I mean, it's important. And it's important to use the time that you have to gain the most compounding you can. And I mean, that was, Warren Buffett, the famous investor, you know, one of the wealthiest people in the world due to his investing. Um, I mean, one of the things he always looked for was cash flow.
Mhm.
You know, for him, he would buy the whole company. So the cash flow was the dividend and vice versa. So for us, buying 100 shares of a stock that pays 4 to 5% dividend isn't a bad way to go.
Mhm.
You're kind of following Warren Buffett a little bit in the way the way he views the world.
So, in conclusion, we'll wrap it up here. Um, this is absolutely something that if you have been thinking about, wondering about, dividends or portfolio growth or like what that looks like, if you have a little bit more risk aversion, like this is a conversation that we can absolutely have. Um, and we build portfolios around it if needed, right? If that's the desire, or even for a portion of it, right? Like this section of the portfolio is in dividend paying stocks because this is what you need to live on, right? Like that's part of the investment planning plus financial planning process, right? It's like, what do you need to live? Let's make your investments actually match that in these different ways. Um, so if that's a conversation that you as the listener have been interested in wanting to talk about, the door is open, right? We're here. Would love
We're
to talk
always
to you.
here.
Always here. But then even just in general, like if you have a planner that you appreciate and you like to work with, this is a conversation that you can have with them as well. Just to again open up lines of communication, bring more education to the table. So, if this was interesting, if you have questions about it, we are always open for questions. You can get me at Hannah, HANNAH, at expansiveceo.com and just put podcast question in the subject line. And Brad, how can people get a hold of you?
You can email me at bhaines, BHAINES, at juncturewealth.com. And again, also put in this in the subject line podcast question, and I will get back to you within a day or two.
Yeah, beautiful. Well, Brad, thank you again for being here with us this week. And if we see you next week, that'll be awesome. If not, I've got other podcast episodes coming out. So if you liked this episode, I would really love to receive your feedback, receive your review and rating wherever you listen. If you listen on Apple Podcasts or Spotify, especially, that is the best way for us to reach new listeners and to keep educating more and more people about what their options truly are. So, thank you for listening, and we'll see you next time.
Yeah, so I'm Svetlana and I'm Hannah's assistant, and I actually also am an entrepreneur. And if you're watching by YouTube, you can see I'm in my one of my businesses in my music studio because one of my businesses is offering music classes and private lessons in Lebanon, Ohio. Um, but I got into entrepreneurship because I restarted my life a few years ago. I was a stay-at-home mom after teaching in the public schools, for a few years. And that led me down the path of needing instant income. And so I started taken on some clients as a virtual assistant. And through that journey, I learned how to support businesses on all sorts of levels, even some corporations who run EOS. I used to run 90 meetings, and solopreneurs like you who are spirit centered, and all sorts of business owners. And so I took those skills that I've learned supporting other businesses, and I also have built my own business as well on the side, and that's my music studio.
Mhm.
But yeah, so that's my story, a little bit of it.
A little, yeah, a little tiny bit. And we'll get to dive into more of that as well too, because I think your experiences have been um just such good examples, right? So for me too, I find for me like sharing what I have been through and what I have grown through is actually what resonates the most with people. And I know you have just some um really powerful and important stories to share as well. And I wanted to share the one funny piece is that I moved to, so I'm in Cincinnati, Ohio right now. Lebanon is like 20 minutes north of me, right? So we're really close together. And we didn't really meet back then, but Svetlana went to school with my husband when he was in grad school at the University of Cincinnati in the College Conservatory of Music. And so when we met again, a couple of years ago when Svetlana and I met, I was like, "Oh, you seem familiar. Like I've seen your face somewhere." And we find out that, oh, my husband Adam and you played together in groups sometimes at CCM.
So we're both
Um,
brass players, kind of funny.
yeah, yeah, hilarious. And so when I mentioned your name to my husband, he was like, yeah, I know Svetlana."
Sweet.
How, how weird is that? Just that coincidence that we were both, and you still are heavily involved in music. But that was my degree in my life as well, and so that connection was
Which
really.
goes to show how the universe is really lining things up all the time for us in such mysterious ways.
Hmm. Oh
Like
my
that
gosh.
moment. That's all I
Yeah.
have with that.
Yeah. So let's dive into, yeah, like this. I feel like I'm still like on the microphone, right? Because here I am on the microphone.
Yeah,
But yeah, I'm gonna relinquish a little bit of
I need to
control
get a
here. Uh,
microphone.
right. We'll have to get you a good
One
microphone.
like yours.
But let's talk a little bit about the Expansive CEO program. And I know you created some awesome questions and topics for us to go over. So
Yes.
yeah.
Yeah, so the first chat that I would love to have with you, Hannah, is just kind of showing your heart behind the Expansive CEO program that you've been developing and have been running, in background of X of your X squared wealth. And so since I got to watch watched all the videos and put them all together in the program for you, I wanted to ask you a few questions based on from a lens of you as your executive assistant, but also from the lens of an entrepreneur who's also dealing with her own financial stuff and also being her own CEO of sorts, right?
Mm-hmm.
So, my first question I wanted to open up with was why did you see the need to create the Expansive CEO program?
Oh my gosh. Yeah, that's such a good question. I saw the need for this. It was percolating for a long time. And so I started for background, I started X Squared Wealth Planning in January of 2021. And it was literally just me stepping out on my own, doing what I had been doing as a financial advisor. So X Squared was, me getting to be myself, but still be, a certified financial planner, financial advisor, help people, invest their money, grow their wealth, all of that. It wasn't really truly a departure from what I had been doing. The only thing that was really different was that I really, really desired to focus on business owners. Even when I was back at my old firm at Ameriprise, I really wanted to focus in on business owners, and that really wasn't the demographic that that particular practice served. So it wasn't that I was told that I couldn't work with business owners, but I was definitely discouraged from it and encouraged to look for, you know, people who work at GE or people who work at Johnson and Johnson, right? Any of the like highly compensated employees that we tended to work with across the board in our practice. So my departure, the big change was that nope, I'm going to launch X Squared. I'm going to go out on my own, and I really want to connect with business owners. That was the thing that I wanted. And as I started doing that, especially the first whole year, I was connecting with a lot of business owners who couldn't utilize my services yet in X Squared because they didn't have the financial foundations that they needed in order to even feel like they could pay themselves regularly and feel like they had money to invest afterwards and, to do some retirement planning or help their plan for their kids' education if that's a desire. Um, and there were a lot of people that I met like this. I networked like crazy. I met with so many people, especially over the first couple of years of my business. And it was so clear to me that there was a need. And what I think about was I was working with a business coach for the first 2 years of my business. And in the first year, I was having these thoughts of like, oh, what if there's like a collective or something along, like there was this idea that was percolating around wanting to create a group for people to talk about money, for business owners to be able to start their, investment journey. Like I had this idea and I had written it down and put it on my vision board. And my business coach at the time was really like, it was really essential, for her to say this to me, given other topics we'll talk about, how multi-passionate I tend to be.
Mhm.
But she said, okay, what if you put a pin in that and allow it to grow in whatever timing is right, and focus on X squared right now. Focus on the people that you can serve, that you can serve in X squared, basically,
Mhm.
was what she was encouraging me to do. And with that, I was like, okay, so I'm going to put a pin in it. This idea,
that. Could you try again?
oh goodness, Siri is interrupting. Here we go.
As always.
As always. Thanks, Siri. Um, anyway, so she helped me kind of focus my energy back onto, okay, who can I serve? Who can I bring in that I can serve in X squared? Because this is a different demographic. These are the business owners that need help establishing financial systems that are going to be really good for them and help them grow long term. So that was in 2021 where that idea was percolating. In 2022, that's when I started meeting more people who could actually help me create that, where I wouldn't be like doing so much of the forcing of it, right? Like, or so much of the heavy lifting by myself is what that feels like. And as I explored that, probably like May, June of 2022, it started feeling like something. It started feeling like, okay, here's the material that goes in this. Here is, what we're going to work on. And here's the framework. Here's the framework that I use with my clients right now, that works, that gets results. And we can translate this into a program that other business owners can follow, right? So that was all starting to take shape. It really was the fall then of 2022 where I launched a workshop. So it started out as a workshop. And that really went through the discovery, alignment, and expansion process, which we can talk more about later. But that was like the nugget, the kernel, the expansive CEO process that I created was, discovery, alignment, expansion as its own process. And go ahead.
And it was a kind of because I remember you mentioning before you saw because people weren't able to afford, that they weren't there yet to need the X squared, right? You wanted to help them kind of get there, and right, and that's part of that process was to kind of help them
Mhm.
line things up in their business and within themselves, right? So that way they are abundant.
Mhm. Exactly. Yeah, that was absolutely part of it, or part of the um what I saw as the ecosystem
Mhm.
that I'm creating, right? That there are people who are solid and ready and want to elevate in their financial awareness, the financial peace they have within themselves, and they also have businesses that are making, multiple six figures, seven figures, right? That they're making money. They have an offer that really, really works, or a service that really works, and they need that help
Mhm.
lining up their finances better. That's more X squared.
Mhm.
And so what about all of the people that see me, that want to work with me, but like you said, aren't quite there yet
Mhm.
because they need the financial, like literally the financial systems for their
Mhm.
business that are going to make sense, that are going to work. And they need that inner piece, that also, was so important to me. Um, And so, yeah, we started with the workshop back in 2022. I launched that a couple of times and then realized that that was the first half. That's what it was. It was like, okay, the discovery, alignment, expansion as the framework is really important. And then on top of that, it's how do we create profit? How do we create, your actual budget and spending plan? How do we create offers that are going to actually, create the income that you need in order to support your business's growth and in order to support your family in the way that you want? Those are the questions. Those are the main pieces that, when I was meeting people who needed this work, like it's such a huge thing, right? Like just to be able to provide for your family in the way that you want, or provide for yourself in the way that like it feels safe. You feel safe with your money because you've got it covered.
Mhm.
That level of financial peace is so important.
Right. And that's something that I had to kind of work through myself as well, because I was a public school teacher and then I was a stay-at-home mom who like didn't even really have awareness of finances, you know?
Mhm.
And so, and as I started my business, in a way that propelled my healing, because I saw people valued me and they wanted to work with me. Oh, wait, I have value. I left a pretty severely abusive situation back in 2021 when you were also
Mhm.
restarting your self kind of fun. But I can see the parallels of that for me too. As my business grew, I also needed to heal to continue supporting the growth. So I can really see how the expansive CEO, like the program, really addresses those things in order to create more,
Mhm.
more healing, and then therefore more alignment and yeah, and more joy, honestly.
Yeah,
Even more for
exactly.
you.
Right. Yeah, that's exactly it. For me, it's the expansion piece, and we talk about this in the program, that when you discovery is discovering who you are, where you are right now, and what
Mhm.
you want to create. That's all in the discovery section. The alignment section is, okay, how do we align our time, money, and energy as like focused as possible on these things that we truly want to experience. We just discovered what we want to create.
Mhm.
How do we align our time, money, and energy in that way?
Mhm.
And the alignment piece also includes, a discussion of your human design and who you are, and how we fit, how we understand who we are in this lifetime, different, separate, unique from anyone else, and also use
Mhm.
that in our alignment. Um,
Yeah,
but then
that's
the
good.
expansion piece, yeah, the expansion is what everyone craves. We all want to grow, we all want to expand, and yeah, it requires these other pieces, the discovery and the alignment first,
Right.
so that the expansion can happen, and so that the expansion, when you are growing and when you are expanding into um, new markets, or growing your income, growing your revenue, growing your team, things are gonna happen the way I literally say shit's gonna break, right? When you start expanding, you're gonna be expanding on the foundation that you've created, and you're gonna start to notice, oh, that beam under the foundation was a little shaky.
Mhm.
We need to go, fix that. Maybe that's your team. Maybe that's your relationship at home. Maybe that's relationship with your kids. Maybe, that's your relationship to yourself, or exercise, or food, or alcohol, whatever that is. You're going to start to notice
Mhm.
those things that need to shift in your life when you're expanding.
Yeah, so to piggyback on that topic here, so you do focus a lot on feelings and a lot of what you teach publicly, and also even with your clients. I notice you asking even your X squared clients, like, well, how do you feel about that? How does that resonate, about with this financial decision, or whatever, with this debt, with that, so I was wanting to just talk about that for a minute. Why do you believe those feelings and those gut reactions are really critical and important, especially when it comes to making decisions in your business and your money?
Okay, so feelings, the more that I work on this, both for myself and with clients, I feel that how we feel about money, what's coming up when we are about to make a financial decision, is at least 50% of the decision, if not more. It's probably even more like 60, 70%, more so than here's the data.
Mm.
And so the reason, I mean, like from a just a practicality standpoint, I can show someone the data of, okay, here's option A, here's option B, here's option C. The data shows, right? If we do B, you're going to end up with the most money at the end of your life. Or the data shows that A will mean you pay lower taxes for now, but it's not as good over the long term. Whatever that scenario might be, um, I can show you. I can show you the numbers. And I always say it's not to take away from the importance of the numbers. It's important. It's important to understand. Or I believe it's important anyway to understand what the numbers are saying.
Absolutely.
But the thing that I am doing while I'm telling someone like, okay, here are the options and here's what it looks like, I am still always paying attention to how they're feeling, what their body posture is doing, what their face is doing, right? Some people it's like written all over their face what they're feeling. So I'm paying attention to their reactions
Mm-hmm.
and then also like explicitly asking,
Mm-hmm.
how do you feel? What do you feel about this? Not what do you think? I don't ask people, what do you think about that? I say, what do you feel about that?
Mm-hmm.
And that, sometimes people will like start to think, getting their head still. And I'll bring it back again. And like, okay, how do you feel about it? And they might tell me, oh, I feel a little anxious about that. Oh, that feels really exciting. Right. Whatever it is that they're feeling, we're going to look at that more closely because that is leading us into what's the right decision for you specifically.
Mm-hmm.
It could be, if I have two different clients in front of me and I'm giving them the exact same information, one might choose A because that's what feels the
Mm-hmm.
most, that's where they feel the safest.
Right.
And the other one might choose B because they're like, I want to take more risk. They will say that's like A is the safer choice, B is the riskier choice. They're excited about that. That makes them want to, like be more bright and more bold. And they
Right.
like that. They want to move towards that. Neither one is wrong.
Mm-hmm.
Neither one is wrong. We need to align what we are actually doing in your finances with where you truly feel pulled.
Absolutely. And that's something that I had to learn. I used to be very conservative, evangelical Christian. And so for me, I grew up with this black and white, everything's going to lead you to hell or lead you to heaven. So you got to pick
Mhm.
every decision. Even, I mean, it was to a point where if you shop at Kroger versus Aldi, there was one better. It was so paralyzing, you know?
Yeah.
And so I really had to learn that for myself. There's no right or wrong with these decisions, you know, and every decision is going to be a 50-50. I mean, it's just life, right? Life is going to be 50-50, great, and some not, you know, some more challenging things about that decision. But I love that you bring that to your clients and you give them all the options and you really try to help them figure out what would what's really working for them at that time, you know, and really to tune into their bodies.
Hmm.
And I think that's huge because we don't really talk, you know, and especially in the financial industry, I'm sure nobody goes, where is that in your body?
Yes.
Where is that in
Yeah.
your body? And that's where you bring that human design part in, you know, when from previous episodes, you've discussed how human design helps you understand how you make decisions too. And knowing some of your clients are more prone to yes or no questions versus more open-ended questions. I think that's really cool that you're able to really dial in on that person's way, you know, the design of making those decisions for them. And I think that's really
Hmm.
beautiful. So,
Thank you. Yeah, I wanted to expand on that
mhm,
just for a moment because you mentioned something that was like really beautiful is that it's where you are right now.
mhm,
And so there's a tendency, actually two things of what you said are just like I got to talk about those.
yeah,
One, most of the financial industry is stuck in the thinking,
right.
right? It's just here's the data, here's what the data says. Why would you do anything different? And it always puts the financial advisor in the role of like, I know best and you should just listen to me. I've got the expert hat on. And so just don't, like, you turn off your brain and just listen to my brain and do what I'm telling you. And that has been the, hmm, I want to say, like, the working MO for most of the financial advisor space for decades, for a really long time. Right. And so I do not believe I'm the only one. I know for a fact that there are other amazing financial advisors out there now who are doing this work that is more focused on the client. Um, but it's still a small percentage. We're still
Right.
not the norm, and not the average financial advisor. We're still like on the leading edge of, hey, we actually need to really consider how people are feeling when they're making decisions. And I say, so there's that piece, which leads into, sometimes we are making decisions and we're taking baby steps. And so I can think of so many clients who, started really anxious, super, super anxious about their financial situation, super anxious about looking at their business numbers. Um, and over time, over a year, over 18 months, over 2 years, that they've grown
Mhm.
into the space where they can look at their finances with ease. They can look at them critically and be like, "Oh, I understand why, my payroll was so high and my intake was lower, and okay, I can see the places where I can shift without it being
Mhm.
an emotional crisis."
Without any shame or
Right.
any sort of feeling that's, yeah, like making it good or bad about me, or my business is good or bad, or I'm good or bad because of these numbers, but more of just this is data. And
Right, right. And so sometimes it feels like, the progress at first feels a little bit slow because we're working a lot on the nervous system, around your reactions to what's coming up around your money, rather than being like, we're going to power through. We're just going to
right.
power through, make all these decisions, because steamrolling your feelings just means they're burying deeper so that when something happens down the road, they come up even stronger.
Mhm.
And it turns, I mean, I've seen that happen too earlier in my career when I wasn't as in tune and I didn't understand this quite as well. Um, but that, when we take the process and really prioritize that inner peace, that feeling of peace with your finances, and build on that,
Mhm.
I feel like that's where actual transformation happens, because you're building from you're rebuilding your foundation is really what's happening. You're rebuilding your financial foundation for your life
Right.
into something that is stable. You think about it for a house, right? You're digging down to the level you need to dig to. Let's say we're in Cincinnati, where we have to dig basements, right? You got to dig below the freeze line. You got to get down to a really, like, solid level where your house is going to be safe, and then you're going to lay that foundation, and then everything you put on top of it, now we are making it so solid. And so that's the shift.
Which is something that you really dive into in that discovery piece in your program. And I love that you look into the emotional aspect, like where do you want to be? You ask those emotional questions, but also those practical, like how much money are you trying to, what do you need to pay your bills? And so you offer both of those um, perspectives on the discovery piece when somebody first starts kind of becoming more self-aware and
Mhm.
of all their feelings, but also their numbers. And I love how you marry that together. And moving on from the discovery with the alignment, you've said in your program that that alignment for you, or you teach alignment with energy and time and money.
Mhm.
So I, to me personally, I struggle aligning with my energy. I think I'm pretty hardcore with my energy. I have a lot of energy. I'm like the Energizer bunny, but sometimes I feel like I'm spread out all over the place. But I love that you talk about aligning with your energy? Because I've heard other people also mention, like, I've only got energy to work 4 hours a day, and that's where I draw my boundaries, and that's where I draw my limits. And I think that's great too, you know? So, how do you help people maybe figure out that piece, that energy piece? Because I think
Okay. Yeah. Yeah. So, and in the program, what we talk about is that I do believe that energy is the cornerstone. Like what, and it has a few different meanings. So again, on my practical side, literally like what you said, like how much time and energy do you physically have for this thing? And so that's one piece of it, right? And so aligning time and money goes behind that. Like how much energy do you have to give from your body, from your reserves? The second aspect of that is where are you being pulled? Where are you being drawn to? What are you excited about? Because when we are working on things that we actually care about, that excite us, that we have a passion for, where, something that really matters to us, we we are more excited about it. We can put more energy into it than something that we are trudging through.
Right.
Right. And anyone in my world who's an entrepreneur, um, like thinking back to working in corporate is usually that thing. They're like, oh my gosh, I couldn't. Or by the end, I was just holding on for dear life, right? Just like making it through the day. And your energy just feels so heavy and so drained, and you're so burned out. But if you just flip that switch into something that you actually care about, that you actually benefit from, that your family actually benefits from, suddenly that exact same 24 hours feels like it's not even enough. You're like, oh my gosh, I could keep going. Right. Like that's a big piece of it is what are you wanting? What do you want to create? What do you feel pulled to? And then the last aspect of energy is your human design. Is related to that is, like what is your human design type? So Svetlana, you're a projector, and projectors are, they're you described it really well, actually. Like you can have, if you're doing something you're excited about, you could be the Energizer Bunny and have
Mhm.
so much energy for that. And at the same time, you also need to be able to step back and actually rest. You need to be able to give yourself time to rest. It's not going to be, you don't have consistent access to that Energizer Bunny energy. You literally have to give yourself time to like just chill, just have nothing going on. That's part of the projector aura. I'm a manifesting generator, and other generator types are similar. We have more consistent access to our energy stores. And
Mhm.
so we actually can work more consistently and have energy more consistently than the other types. And still at the same time, if we're using that energy towards something that we hate or really don't like or are done with, it still feels right. Like the energy is going to burn out. We're going to lose it. We're going to lose our ability to keep going, moving towards that thing. Um, and so the energy piece is like our beacon, our North Star towards, okay, what are you being pulled to? What's exciting to you? And let's use that as our guide point to filter in our time and our money. Where do we put our time and where do we put our money
Mhm.
so that it's in service to getting us to that North Star?
How do you help clients pivot? I know you've had a podcast. We've had a podcast before about, I think it was about like blooming where you're planted
Mhm.
and not trying to go to another mountain. But like, what if someone really feels drawn, their energy and their alignment is actually not at all with what they're doing? Let's say they're in corporate and they want to switch over to something that's more in alignment with their passion, and but they're afraid of that financial, the hit. What would you say to somebody like that who's
Mm.
considering doing something drastic?
Yeah. So the thing with moving to the other mountain,
Mhm.
I think that's such a good analogy. It's sometimes we might see that as another mountain from one view, right? In our limited view where we're at, we're on this trail and I see this peak over there and you're like, "Ugh, I'm so sick of this trail. I don't want to do any more switchbacks. I just want to be on that other mountain over there." And we think that they're separate and we think that they're different.
Hmm.
But if we took a drone up, 500 feet or whatever, maybe 1,000, and we look up topographically, we see that those are actually connected. We see that this peak over there is actually it's part of the same mountain chain.
Mhm.
It's not actually as different as what we think it is. We just need to maybe shift. Maybe that pivot is okay, you are heading up this trail that's going towards this peak and you're noticing that okay, that peak is not, right? Your energy is saying, "Wait, nope, that's the wrong peak." But if we get to this next mile marker, you actually see that, "Oh, I can take this other trail
Mhm.
and that is going to this other peak." They're one and the same. They're part of the same mountain chain.
Mhm.
So
Right,
we'll
right.
we'll we'll stick with that metaphor for a second because I think the way that um what I typically see is that when people are ready to leave corporate or leave a position where they feel like they're not being able to use all of their talents and abilities, or they're just not happy, a lot of times it's smaller tweaks than we think that need to be made rather than just like full on burn it down to the ground and start over. Very rarely do I see someone actually burn it down all the way to the ground and
Right.
like completely start again. Not that that's never the right move.
Sure.
But a lot of times it's, hey, what foundation are we building on? Let's, if some things need to burn, I have been there. I have literally felt that fire around me, felt like burning armor off of myself,
Mhm.
burning layers off to get to the core of who I was.
Right.
And that's what it felt like, actually leaving my last firm and creating X squared. It literally felt like I had times of feeling like I was going through fire,
Right.
fire in my chest, fire in my body. Um, and the imagery that I would get is like just like charred, blackened, and like layers just coming off. So that I was more me. I was getting more to the center of me. And the beautiful part of that I notice over and over again is that once I found
Mhm.
that core of like, I am here to help people create inner peace with their finances. And that happens in lots of different ways. But
Mhm.
that inner, like, that's me, that's my core. Someone in marketing, right? Maybe their core is, I am here to help you say what it is you really mean to say and do it well, right? Maybe if that's the core they keep coming back to, we don't have to burn everything down. Just the stuff that's the armor that you've put on to go into the place that is not your fit.
Mhm.
Let's burn that part away and let's keep the good parts. Let's really like look at what is so beautiful and unique and special about you, all of your talents, everything that you bring to the table, and refocus that energy. Does that make sense? Did I answer the
Yeah.
question?
Yeah, that's really cool. Yeah, I love that because there's a lot of wisdom there for sure. And also that kind of reminded me of another thing that I wanted to talk about is with your alignment piece in the program. It just reminded me of what I learned about the reticular activating system in the brain because I'm really into psychology and as part of my healing journey, I learned so much about the brain.
Mhm.
But the reticular activating system, or the RAS, I guess is what it's sometimes dubbed as, is a way for you is basically what your brain does when you get an idea and when you write it down and you talk about it, and all of a sudden your mind starts looking for the pieces to come together to kind of show that idea and bring it into fruition in your life. And
Hmm.
when I listened to some of your alignment pieces, it almost felt like the way that you're like asking for them to write down, what they're dreaming, what they're wishing for. It's kind of a great. It's almost activating that, and I just wanted to play on that, because that's how it worked in my life too. I had to. Part of my healing journey was to really kind of envision, where do I want to be in 5 years. Sure, maybe I'm not going to be a multimillionaire next year. But, if I ultimately set that goal, if I start writing it down, or if I want to shift things in my business or whatever, eventually there's something beautiful about the way the universe is, you know, designed for us, but also just putting it out there and your mind starts picking up those pieces. And I would add that as well to what you just said. And
Yeah, that,
keep dreaming. I guess that's the.
yes, yeah, that's so, I love bringing in, um, these like, this is how our brain works. Like you're
Right.
saying, right? Like um, there's a spiritual and emotional aspect to it, and it's also physiological,
Right.
right? That's not separate. And that's the thing that I think is so beautiful, is that, when we talk about mindset work and shifting your mindset, um, when we do that, we are literally, again, like moving with our nervous system. And, there's, oh gosh, what is that one? The polyvagal theory, right?
Mhm.
You're the dorsal vagal nerve, right? Or the vagus nerve, rather. And when you're in different states in your body, right? Fight, flight, freeze, fawn, like these are things we have to work with and understand so that we can get to that reticular activating system, right? And so that we can actually show ourselves, hey, this is what I want to create, and then our brain looks for ways
Mhm.
that that's true. Like
Yep.
that's what's happening, right? And I have a friend who is a meditation teacher, and Reiki practitioner. And one thing she said once that was like, oh my gosh, it's so, again, it's so logical, and it speaks to the emotional and spiritual, that we can only take in the teeny tiniest bit of information that our full system is getting at any given time. There's so much information around us, like billions and billions of pieces of individual information, that our brain and body has to filter it down to a very narrow level that we can actually like take in at any given time. And so when you are looking for a specific thing, if you're looking for a confirmation of a belief, it's already there.
Mhm.
If you're in any belief, you can look for a confirmation of any belief, that information is there around you. And so you can find, if you are looking for it, you can find it. It's it's just a matter of focusing down on, here's what I want to create, here's what I want to experience, and then letting your brain and nervous system like find it and
Mhm.
focus on it, because again, there's so much information around us all the time, no matter what, you know.
Mhm.
It's
And
like
again,
the
that's so cool how you can talk about that. Let's bring the conversation in about the nervous system now and the brain, but also that spirituality. I feel like that is more and more what a lot of entrepreneurs are needing,
Mhm.
is that those conversations. In our last, not last, but your last part of the program, you talk about expansion, and you mentioned it a little earlier. I thought it was just interesting how you taught, okay, so now that you've discovered where you want to go, what your dreams are, and now that you're starting to align with those those pieces in your heart, then you're going to start seeing expansion from the healing and and all the financial alignment, et cetera. But then stuff's going to break. So let's talk about that as well, just how you address that in the program and how you almost talked about it as a spiral effect. So
Mhm.
if you can maybe elaborate more on that, that'd be great.
Yeah, I heard, I can't remember who I heard this from first. Um as several years ago, but that healing tends to be or can be viewed as a spiral staircase.
Mhm.
And so the kind of our central life themes kind of that we're here to heal and to move through and teach others to move through truly um are like plumb lines down the middle of a spiral staircase. And when we every time we heal and we go through, we'll come back to these issues again. And it's, at the bottom, it feels heavy. It feels hard. It feels like we're really like that dark night of the soul, right? That a lot of us go through. It feels like you're gonna die. And I've been through that
Mhm.
many times.
Yep.
Right? Like I might die this time. Nope, we're still alive. It's good. But that's how like the death of a piece of us, right? It feels so difficult. It feels so heavy.
Mhm.
And then, we live through, we make it through. And then so now we're up on, level 2 of the spiral staircase. And then we see that same issue come back again. And this time it's like, oh, I'm seeing it from a different angle. I'm seeing it from a higher perspective. And
Mhm.
I can move through this more easily, right? And you snip it. That's I like feel like we have like scissors, right? And then we snip the line. Like,
Mhm.
oh, we're letting that piece go. And then we come back up again and now it's shorter. But we see it again. We see that whatever that thing is for you, that healing piece, whether it's, feelings of abandonment, feelings of um worthiness, feelings of, your ability to love and be loved, right? You'll see it again and it feels lighter. It feels easier. Like snip that off again at that next level.
And
And
that's
so,
so applicable to business because you're dealing with clients and you might feel rejection. You might
yeah.
feel, you know what I mean? So that's such a parallel, I feel,
Mhm.
your personal healing and the way that you run your business. But also like claiming your worth too and raising your prices, right? Like, but if you don't believe your worth, then your business won't reflect that. You know, and I think that's
Yes.
really cool how you address that, but also just spiraling through that in your in a business mindset too, or through the lens of just looking at a business, how if the business is growing and it's expanding, things are going to break, and then
Mhm.
we reassess, we realign, we
Mhm.
rediscover. And I love how you have both of those kind of themes, you know, personally, but also business wise.
Yeah, yeah, that sense of that's exactly it with expansion, is that as you expand, when stuff breaks, we talked about that a little bit, maybe, that could be a big client leaves, or and a key employee
Mhm.
quits, or, something like some big technological thing in your company breaks, or you get sued, or right, like things happen in business, and you can choose to either the way that I describe it is you can either choose to like go into the victim mentality of like, why is this happening to me, what's so, like, and let it spiral downward. That's the other way, right? Like just roll down the hill to where you're constantly, okay, now I have to rebuild, constantly rebuilding, uh, and look at it that way. Or you can take that inflection point, whatever that thing that happened is, you can take that as an inflection point to use take the expansive mindset there. And what is the expansive mindset? That's, oh, yeah, what happened with that client? Well, it could be many reasons, right? But if you zoom out and look at it, maybe you have changed a lot, right?
Mhm.
Maybe you have shifted in your alignment as you've aligned to new things and seen like, oh, that client actually was not a good fit for where I want to go.
Mhm.
And so this isn't a crisis of like, what are we going to do? It's more, okay, now there is room to bring
Mhm.
in the clients that are aligned with this new vision.
Yeah.
And you
Every
can,
time you say yes, you're saying no to something,
mm-hmm.
and vice versa. So I think that's really cool. Yeah, that.
Yeah. And so it's always looking at like, how is this for you rather than
Mhm.
to you? How is this happening for you rather than happening to you?
That's really beautiful.
And staying on that path, right? Staying on that, like taking empowered, aligned action rather than being reactive and acting out of fear. And, oh, can't let this client leave. We gotta repair. We gotta find a way to make it work. Let's assess first. Let's look at it and then take empowered action rather than reactive, fear-based action.
And it's not like you're saying it's always going to be this. Well, you're not saying as soon as you buy the program and go through the program, it's just going to be up, 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 up. I love that. You're like, this is the nature of business. It's like very cyclical, and and you're giving tools to business owners to find peace within that, find that centering while things might be happening around them. And one thing that I really loved is your little chart that you shared, where it's like, okay, you go up, but then like a blimp, you realign, you decide something happens, you lose a client or whatever, and then your projection comes down, right? Dips down. But then as you actually reassess and decide how you want to do things for going forward, you start building back up. And I think, yeah, that was really good for me to see because I'm always
Mm,
like, it's never enough. I
right.
struggle
Right. Like, why are we
with the
going
stuff.
backwards?
Yeah, yeah, exactly. So I really
Mm,
like that too, how you show that you provide those tools and the support, and for entrepreneurs to
mm.
keep moving and keep growing. Yeah, and setting them up well for the
Yeah.
future.
Yeah. Thank you. Thank you for noticing that. And that, yeah, really, it truly is
Mhm.
that things are never going to stop happening.
Mhm.
There's always going to be something, and it's how you respond to it that
Mhm.
makes all the difference. People um who don't last in business and people who do last in business, like the one of the defining factors is, what choice are you going to make
Mhm.
with this? The two people can have the exact same thing happen. One of them, it can take them completely out, and the other one, they can use it to build from. And
Mhm.
that's the way that I continuously see it, that you
Yeah.
always have a choice.
Yeah. And I think a subtitle to your program should be like how to be an entrepreneur. Honestly, because you teach both of that, the grit, but also the heart, and then the finance, which is so important for all three to be
Aw.
good, So I wanted to say that. I think that's kind of a good subtitle for you.
We
What you're
maybe we'll
doing.
have to do it. I kind of love that, actually.
Yeah, honestly.
What's the real? Yeah, let's talk about that.
Yeah. But honestly, I feel like that's a great crash course on to like, okay, or you're struggling, if you're finding that you're kind of struggling, what are your missing pieces? And let's go ahead and realign you, where you're finding your footing again. And I think yeah, I think that would be a fun title.
We'll have to think about that.
Yeah. Well, thank you, Hannah, for taking the time today on a Sunday to with my busy schedule. So I appreciate
Yeah.
it. And thanks for explaining a little bit more about your heart and for your clients and for the program. I know it's a huge value. I've been through other financial literacy programs geared for females and entrepreneurs, and I really feel like yours is a standout, and
Mm,
I've learned so much from it. Just even the financial literacy part is even what you teach in that is kind of a unique approach as well. So
thank
for all you
you.
do. Yeah.
Yeah. Your perspective is so helpful. And I'll tell you from um it's a last little minute here from my perspective, my human design being my profile is a 6'2", which is called the role model slash hermit. Uh but also the role model, the teacher, again, going through things that I've been through and then teaching them is a huge part of that 6 line. And then the huge part of the 2 line is kind of being a natural. Also, there's the hermit part where like I need to I need to go be a hermit every once in a while. But a big piece of that is also being an artist and being natural and being in touch with things that, like, just this is what comes easily to me. And what happens with that is that I can't always see that line can't see itself very well.
Okay.
It's only like, I don't know why this is so special. It's just what's coming out, right? That's just how I am. And so for you to, one, like literally create, like make like break the program into bite-sized pieces so that it's, we can um, have it as a really solid course offering. But for you to then go through the whole thing and then reflect back to me like, oh, yeah, I've seen other programs and yours is different in these ways and it's special in these ways. Like, I I didn't know, or I couldn't necessarily
Mhm.
see that for myself. So yeah, I really, really appreciate your
Yeah, well,
perspective.
yeah, I know I know the people who connect to you absolutely adore you, all your clients and the people that you work with. You have shared so much amazing things with them, and helped them so much. So I know this program is just the next step for you to do that.
Mm, thank you. Thank you, Svetlana. And I know we actually had like a few other things that we wanted to talk about that we didn't get to in this hour. So I'm excited actually to continue this little series and talk more. So for anyone listening, we are definitely going to be doing more of this. And I wanted to offer that this is a really, really good format if anyone has questions as well for the fireside chat type. I think even better than like investment Fridays. Well, some of those are good. It's really great to get Brad's perspective on those if
Yeah,
you ever listen, right? Like there's some really good stuff there.
absolutely. So brilliant.
Right. I love it. We're a good combo, but this is a really good setting too for those listener questions. So as always, yeah, you can send those over either to me at Hannah, HANNAH at expansiveceo.com. Or you can send them to support at expansiveceo.com and Svetlana will see those. She'll see them either way because she checks
Yeah,
me.
that's true. I'm everywhere.
Everywhere. Um, and I also wanted to give Svetlana a shout out for anyone who is in the Cincinnati, especially northern Cincinnati or South Dayton area. If you are looking for a music teacher, like I can't imagine a better fit for the kids that truly like my kids. Most of the people I know, they're kids that are ready, like they want to learn, but they need to learn in a way that actually speaks to them and is like child centered,
Right.
and meets people where they're at. And that's exactly your philosophy of teaching.
Yes.
So yeah.
It's kind of like you, where you're like, all most financial advisors take this one route where it's very professional and we tell you what to do. And I feel like music can also be that way in
Mhm.
some respects, And yeah, that's what I'm also trying to do. Similar to you, parallel, where it's no, music is for everyone, and and we can make it accessible in ways that are fun and engaging, and you'll learn so much. So thank
Yeah.
you. That's really sweet of you.
Yeah. And where can people find you?
For music lessons, they can find me
Yes.
at wellspringmac.com.
There you
I
go. Yeah.
also do music and art center in Lebanon, Ohio, here
And you
downtown.
do private lessons, but also you're starting group classes at the new studio,
Yes,
group
yes,
piano, children's
exactly. Yeah,
choir.
choir, children's choir, group piano, pre-K, toddler and baby classes, and hopefully in the fall I'll be able to well, I will set up a schedule for a lot of homeschooling kids as well during the day, and then keep filling those evening classes as well. And I do have some classes for adults. We have guitar and piano, and we have a adult orchestra that meets on Fridays, which is actually
Awesome.
sweet. We've had an average like 4 or 5 people showing up to that now, so it's growing, and everybody's welcome. Just come and check it out.
Amazing. Okay. Thank you, Svetlana, for everything you do and just for being who you are. I love and appreciate you. And I know you're going to be the one who does this podcast too. So thank you
Yeah.
always. I appreciate you.
Now I get to produce this.
Right? I love it. Thank you so much. And we'll see you again at the next Fireside Chat.
Thank you. Take care.
That's it for this episode. Thanks for listening, and be sure to like and subscribe. And again, if anything resonated with you from this episode, I would love to hear from you. Email me at Hannah, HANNAH, at expansiveceo.com and tell me about it. And if you're ready for your greatest expansion, you can find ways to work with me at expansiveceo.com and at x2wealthplanning.com. That's X, the numeral 2, wealthplanning.com. So until next time, remember that there is enough, you are enough, and your birthright in this lifetime is to be expansive.